Look, I owe you all an apology. I owe you all my sincerest apologies. This episode was actually shot back in May, and Dr. Gregg was actually my first guest on my podcast. And so I couldn't even move forward with this episode without apologizing to you all for holding back so much value for so long. And a lot of the things that we discussed in this episode, after I got the edits back, I rewatched it, and a lot of the things that we discussed, I had actually been living through. I had been living over these past 5 or so months. I just wanted to acknowledge that to both Dr. Gregg and my audience. We are still learning. We're still growing. That's what this podcast and what this channel is all about. Growth, education, learning, making mistakes, learning from your mistakes, and things of that sort. So before we started recording, I asked Dr. Gregg if I could offer his strategies to my audience at a discounted rate. And he agreed. But after everything that's happened, we decided that we're actually going to give it away for free. How about that? So we're going to do a giveaway. So make sure you watch until the end to get details on how you can get the #1 Forex trading strategy, Pip Run, for free. So with all that being said, let's get into this episode with my brother, Dr. Gregg McLeod. Y'all can look forward to seeing me more often. I'm going to be doing this podcast. It's called the I Homeschooled Myself podcast. It's the ENT.
I had to tee myself up just to become a boss. I had to run that pack up just to pay the cost. I was on that road, ain't have a pot to piss in. Now I'm looking at this M, I made the right decision. I done came a long way.
Welcome back to another powerful episode of I Homeschool Myself, where creators, entrepreneurs, and digital pioneers come to learn how to lead, innovate, and build lasting wealth in the new economy. Today's guest is a true giant in the world of trading and financial education, Dr. Gregg McLeod. He's not just a 30-year trading veteran, but also the founder and CEO of Elite Traders University. He's mentored thousands around the globe, traded everything from Forex to crypto, and coached at one of the largest retail Forex firms in the world, FXCM, for over a decade. But Dr. Gregg is more than just a trader, he's a leader. UCLA graduate and PhD in Christian business and Christian leadership. He's brought his faith into the world of finance and his integrity into every lesson he teaches. He's the creator of the Pip Run scalping system and the Trend Spotter Indicator, which is a tool that has transformed how people see short-term trading and day trading, scalping. So as someone who's passionate about digital assets and wealth creation, I couldn't be more excited to bring this conversation to you. Whether you're new to trading or already invested in crypto, NFTs, Forex, this is going to be a masterclass from one of the most trusted voices in the space. So get ready to learn, grow, and rethink your approach to money, because Dr. Gregg McLeod is in the building. Thank you for being here, man.
Glad to be here, man.
Yes, sir.
Great. It's a pleasure and honor to be here, to be at I homeschooled myself. I mean, it's what you're doing here. I really congratulate you on just getting the message out there to help people, empower people. So
Appreciate
we're
you.
the same, brother from another mother.
Yes, sir. Yes, sir. So, we're going to get straight to it. So in this episode, we'll dive deep into the world of trading, personal growth, business mastery with Dr. Gregg. Like I say, he's the founder of Elite Traders University, known for helping traders across the world earn consistently in the foreign exchange markets. So Dr. Gregg has created a legacy of both wealth and wisdom. So tell us about the journey, man. How did you get started? Or let's go before trading. What did you do? Let's start from childhood.
I don't want to go back that far, but I grew up in South Central LA during the 70s, 80s, and it was Bloods and Crips, red versus blue. Going to school was always a challenge, and you had to make a choice. I chose green. I didn't want to die. I didn't want to end up in jail.
Right.
So, I chose green. I said, I'm going to learn. I'm going to, my mom, we saved some money and moved us out of the hood. And, I was able to, to keep my grades up with the UCLA. And I wanted to get back to the community. So I became a teacher. I became an English teacher, right? Mm-hmm. And so that was, I went back to Watts, Markham Middle School. I taught at Jordan High School, Jordan Downs, and I would do ministry work there too. And but I was married. I had a young child. It wasn't, teaching wouldn't pay a lot of money back then.
Okay.
So I knew I liked working with the kids, but I needed to find a way of making some money. So I tried having a tutoring business. I tried multi-level marketing, Amway, Quickstar, Luca selling vitamins and shampoo and stuff.
Right.
I know that's bunk. So I finally got on my knees and started praying. Oh God, what should I do? And I opened the Bible up to the parable of the talents.
Mm-hmm.
The book of Matthew.
Yeah.
Right, where the guy took 2 and made 2 more. And the word traded is in the Bible, right? Okay. He traded 2 and made 2 more. He traded 5, made 5 more. And the guy that buried it, the master told me you could at least put it in the bank and got interest. Right. So I go, well, so how can you trade? And this is 1993, so there was no crypto and all this talk about trading. Dow Jones Industrial Average is 400. It's like, Dow Jones is at 40,000 right now, right? Mm-hmm. So to talk about markets was very rare. So I had to do research through the library to find out about trading. So I actually watched a TV show where they actually used to advertise futures. And this guy put up a big sign that says, you can make money trading soybeans. Buy these options and you can buy so many 1,000 bushels of soybeans. And I go, well, I'll do that.
So explain futures. What are futures?
Futures is, the ability to buy and sell commodities on the market, but you gain contracts that guarantee delivery of a commodity on a future date, right?
Okay.
Right. So you want like oil, if you want December delivery or July delivery, right?
So you're anticipating the price of that commodity in the future. So
right. And it's a way of protections for, let's say I grew wheat and I said, if we have a lot of rain, it's going to produce a big crop. If it produces a big crop, the price will go down. So maybe I'll buy either sell short or buy puts.
Because the price is going down.
Down, right. So if I get a big crop and then I have more wheat, it's going to lower the price. Okay. And it means I make less money. But I have I've hedged the underlying with that contract
of the price going down. Mm-hmm. So because you anticipated the price going down, you're able to benefit from that rather than somebody who's just invested in that commodity. Yeah. When it goes down, they lose.
Right. They're naked. They're uncovered.
Okay.
Right.
And so because you covered yourself, you make money on that. On
the hedge, right? It offsets the loss. Gotcha. Right. That's like Southwest had the cheap airline tickets. Mm-hmm. One reason they did that, were able to do that, because they were all able to offset the price of fuel by hedging. They had the best hedgers in the business. So when the price of fuel is going up, well, they bought call options or bought futures contracts on jet fuel. So when the price went up, well, they sold. They was able to offset and lower their cost basis, so they could buy fuel at the same price. They locked in that price. Maybe it was like $3 a gallon, right? Mm-hmm. But when it went up to like $8 a gallon, well, guess what? They have an option that's making, or a contract that's benefiting, right?
Right.
So that option, they basically were buying it at that locked in price. Okay. So that's why they were able to have low prices because they were able to hedge.
Hedging. Mm-hmm. Okay. All right. So you saw the show. About futures. Mm-hmm.
Yeah. And so I believed it. I'm real innocent, kind of like, okay, give this guy $1,000, and I got some money. I borrowed $500 from my mom, and I got it together, and I put it in there, and I bought the contract, right, for no beans.
Beans?
Yeah, soybeans. That was it. Yeah. So I put $1,000 in, and then I tripled my money. I made $3,000. I'm going, I'm a genius. This is so easy. My very first trade, I made 300%.
Wow.
Yeah. So, but that's a kiss of death.
Yeah, exactly.
Because you think you're a genius, you think you know it all. right? And I was like, I could take 1,000, 3,000. I could take 10,000. Like 30
is 90,
right?
Exactly.
So and but I blew that up, right? But the thing about it is, after the blow up, I was depressed. I mean, I felt like a good friend died. We lose that kind of money. When you had that money and lose it.
Oh, I felt that feeling.
You felt that before? You been there?
Yes, sir.
You got the hat, the cap, the t-shirt. Right?
Let's go in on that then. So blowing up an account.
Right.
It's called blowing up an account.
Right.
What is that?
You lose everything, right?
Everything.
The money.
So the money that you invested, you invested 1,000, you flipped it to 3,000, right, and then you blew it all.
It went from 3,000 down to 0. So I have less than what I started with.
So then, like you said, that gave you a feeling like a close friend passed. Huh?
Yeah, like it was sick for days, And then your wife's coming there. Oh, where'd that $1,000? Where's that? I lost it in the market, and that didn't happen in the Black community.
Right.
Losing in the market, like right. You blew it up. So like no. They took it. I was I'm a bad trade. I lost the money. And they're like, I don't understand, but you had to find that money. Right. So, so now, but I taste, I did it once. Mm-hmm. I've had students that once or people I've known who have stopped trading altogether. They lost $1,000. They go, I'll never ever do that again. I'm like, if that's possible for me to do it once, I can do it again. Mm-hmm. Right. And that's me. Edison, he didn't say he messed up 1,200 times. He says he found 1,200 ways not to do it. Right. Right?
Yep. Yeah, they say what is it, like somebody that practices 1,000 kicks, is or basically a person is better off learning one kick 1,000 times, practicing one kick 1,000 times than the person who practices 1,000 kicks.
Yeah. Bruce Lee 10,000 times, right?
Exactly.
Yeah. I mean, any of the great, even Elon Musk, whether you like him or not, the guy blows up a spaceship, and people go, "Oh my God, he should just stop doing stuff because that's why he's the richest man in the world." You think one loss is going to keep him from trying again and succeeding?
Exactly.
That's the difference between the losing mindset and the rich mindset. Is that when you fail forward. It's just like, there's the word success has suck in it.
Right. That's a good one. I've never heard that one before.
You gotta get to the suck before you get to the success, right?
Exactly.
It's combined, You can't have one without the other.
So is that what separates an elite trader from a regular trader? Or what is it that separates an elite trader from any other trader? Or maybe an unsuccessful trader, or the rest of traders?
I think the first thing you have to have is a solid system. I see people try all the time, repeatedly blowing up accounts over and over and over again. And sometimes, Einstein also said that when, definition of insanity is doing the same thing, expecting different results. Right. So you have to use, you have to have that persistence, that bullhead, be like a bulldog and a pork chop and not let go. Mm-hmm. But you gotta know what you're biting into, right? And so I have, if I have a 90% win rate system, see, I have my students, they blow up, but you blew up, I'm so sorry. Don't worry about it. And then, I had a guy, he took account from a $37,000 account, took it down to like $1,000 and then turned back up to 37. His equity curve was like that. I go, why didn't you freak out and panic? I got a 90% win rate system. So is what you're into. If you into something that you can believe in that has tested results, be persistent in it. Right. But then I know I'm in something that sucks. I need to know how to cut my losses and move. You gotta be flexible. Okay. Right?
So being flexible, having a system that is you mentioned a
85 to
90% win rate on a system. Is that normal? Is that typical? What is a typical
system? They always tell you, if you have a 2-to-1 risk-reward ratio and you risk 2% of your account, you can lose 7 trades out of 10 and make money. All right. Okay. Right. Okay. All you do is win a third. You win a third of them at 2%. You're risking 2%. And then you have a 2-to-1 or 3-to-1 risk-reward ratio. 2-to-1 is break even. 3-to-1 you make money. So you can lose 7 out of 10 trades. If I lost 7 trades, I hate myself. You know how we were Pip Run. It's like we have streaks of winnings, right?
Right.
And I tell people, hook your account to my FX book because no one will ever believe you. People will think you photoshopped it.
Right.
It's just not believable. When I work for the brokerage, I hold a record of completing 408 trades without a loss.
408 trades without a loss.
Without a loss.
Wow.
Right. And so I showed it to my boss. I go, okay, we can maybe do something with this. He goes, what kind of bot are you using? I go, I'm not using a bot. I'm using this finger and this mouse and my brain. He said, no, using a bot. This is 2000. We didn't have bots. Too many bots in 2008, 2009.
Mm-hmm.
But it was like a whole row of winning trades.
Wow.
408
to be exact.
Yeah.
Wow.
But now I'll streak 50, 60 trades. My guy will streak, they'll streak 100, 115 trades without a loss. And but their trades don't last that long. Trades will last in 5 seconds, 10 seconds. The guy passed an apex in an hour.
Oh, wow. Well, you hear about people, trading overnight because there's different types of trading. So you have scalping, overnight trading. So which one would you consider the best way of trading?
Well, for me, I'm a scalper.
Okay.
I know I can be right for 10 minutes, 15 minutes.
Okay.
Maybe I can forecast out for a week or a couple of days, but I don't want to go through that. I was at the brokerage. My boss goes, we're pushing some trades here. We're going to, they trade off of a daily and a weekly 4-hour. And we had a trade, and he was, I get in on it, it's pretty much at support. And so I got in, and I'm looking at it, and I'm like, I got it too large. Mm-hmm. So all of a sudden, my equity is going, crazy because it's too big a position, right? Mm-hmm. I go up, and I was up 100, and I was down like 250. I'm like, oh my God. And I said, if anything ever gets back to 100, I'm closing it out. And it went up, and I closed it. And now, those trading forecasts make a lot of noise. Mm-hmm. Ding, 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 ding. Gregg, did you just take profit? It's like, yeah, sir. It's like, you're not supposed to let your profits run and cut your losses short. I'm going, okay, I'm going to get back in the trade. And it dropped. It went back up again. I go, there's $100 in there. 150. I took it. Bing, 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 bing. I'm going to turn the volume of the thing down, right?
Right.
Yeah, Gregg, did you get out of there? I'm going to stay in the trade this time. But I just did that up and down oscillation. I made $700 getting in and out. And I had 8 pip wide spreads in pound yen. Okay, this is not
that's
one
a big
pip.
spread.
And people like, my spreads are 4 pips. Like, oh my God. I was scalping pound yen with 8 pip spreads, right? Wow. But then, I come in the next morning, I hear this, gosh darn it, what's going on? I go, what's going on? Oh, we got stopped out of the trade. The boss is mad. I'm like going, because overnight, something happened. There was something from the Bank of Japan, and thing went down 100 pips or 200 pips and knocked everyone's stops out. Well, Gregg, sorry about getting you, the first trade, we got a little long. I go, I didn't lose. It's like, what do you mean? Oh, I hit that thing 4, 5, 6 times. I made $700. I went to bed that flat and happy. And, and that was the beginning. Like, this is a thing.
So that was the light bulb moment. Take profits.
Right. It was
Take profits.
Pip and run.
Pip and run.
Hit and run.
Pip and run was begun.
Yeah.
Pip and run had begun. So what was the key turning point? Would you consider that the key turning point that led you to becoming a 7-figure trader?
Yeah, being able to get in and out and compound, right? Being able to and to scale, using the equity being built to open more positions. That's the great thing about Forex or margin trading. It leverage is a dual-edged sword. You can magnify losses as well as gains, right? Mm-hmm. You can easily blow yourself apart with leverage.
Right.
But if you have a high probability system with a high probability setup, and if you got the guy on the ground, why don't you ground and pound? You're gonna punch once. You're gonna take as many trades as you want. So I just people say, well, that's kind of irresponsible. It's like, if I have an 80%, 90% win rate system and I've got the setup, why am I not going to take it? So margin call is my stop. That's irresponsible. Yeah, but it paid off.
Say right? Margin call is the stop.
Right.
I know a lot of people that, there's discussion about, having a stop or trading with a stop, trading without a stop. You trade with stops? When it comes to
Yeah, I know where my make or break zone is, because I'm using a combination of Elliott Wave and Fibonacci, Sacred Math kind of stuff. And I know that, there's certain rules that if a certain level is broken, then, my count's off. I'm going in the wrong direction, And usually if I can flip it once we violate. There's so many guidelines and rules, but there's like 3 or 4 basic rules of Elliott Wave. Your wave 2 can't go below wave 1 beginning. So if I buy a pullback on wave 2, if it breaks below wave 1 beginning, I'm not in a wave 2. I'm in C, right? C of 1 or something like that. Oh my God, red alert, right? So my stops will vary based on where I am in the count. So it's like counting cards. Where you ever see there was a movie called 21 of Kevin Spacey.
Okay, yeah, I think I've seen that.
And Lake goes like, put your arms back there. And she knew that the table was hot. She knew the count. She goes, oh yeah, I like watching. I read 17 magazine for ideas. So 17 is the count, right? So you know how much to bet, right? Because you know what the count is. So I know the count's 2. Well, I'm backing up the truck. If I know the count's 4, I'm backing up the truck, right?
So when the opportunity presents itself,
I'm going to step on just like when you drive a car, like a Ferrari. You drive a Ferrari 300 miles an hour on a curvy road, you're going to die.
Right.
Right? But if I get a straight, I'm going to Austin next week. Austin has these highways that have 85 mile per hour limits, the highest limits in the country. Why? Because they're straight. There's nothing there. There's nothing to hit. There's no one to hurt. So like a tumbleweed, right? But so you have an open road, and you need to be in place at a certain time, and there's no one on the road. I might do 85, 90, 95. Right. CHP people out there, Texas Rangers out there.
Right. Allegedly.
Yeah, theoretically, that's what I do.
Exactly.
Yeah.
Okay. So what about trading psychology? Because, like you say, every, basically as a trader, you're gonna take some losses. You might blow an account. Every successful trader has blown accounts before. So how do you, when it comes to mental discipline, patience, consistency, things like that, how do you kind of go about that? What are some tips that you would give as far as discipline, patience, and consistency in the market?
Well, definitely have to set rules as far as, because you can make a lot of money. We have something called TUI. Heard of DUI, driving under the influence? Mm-hmm. TUI is trading under the influence.
Right.
When you have a big gain, they've tested, there was a YouTube video or something out there where they showed these French guys doing a blood test. Mm-hmm. And when people made money in the markets, they basically had like crack cocaine. The endorphins are so high.
Oh, wow.
So that clouds judgment. You get excited, sometimes I'll ring my bell and get excited, right? But really, I don't do that. But, just for show. Mm-hmm. But for the most part, you have to be kind of even keel. If not, you'll let your emotions run you. So you want to be able to after a big win. Let's say you get a 10% win in one trade, 10%. Stop and let that. It's a 7-hour half-life. That means how much that chemical is going to stay in your bloodstream to let that stuff settle down.
It takes 7 hours. It takes 7 hours.
Yeah, for that to settle out. So sometimes, once you hit a win limit, say a loss limit. Everyone says a loss limit, right? You should. Revenge trading and trying to make it back.
Right. Yeah, I've done that too.
But don't keep trading. I'm a hot hammer and keep trading. No, because you got these chemicals flowing through you. So you blow up an account and you go, I don't know how I did that. I know you didn't know why, because you're under the influence. You put the lampshade in your head and start dancing on top of the thing, right? You're invincible, right? You start doing stupid stuff because you've got chemicals going through your body, right? Wow. But you don't know that. Exactly. You're being a responsible trader, blah, blah, blah. Because I'm high.
So that's real science, real science. Biology.
Yeah.
When it comes to trading and dopamine, I guess dopamine.
Right, exactly.
Okay.
Endorphins and dopamine.
Endorphins.
You gotta shut yourself off when you make a lot of money. Right. The next thing is don't trade sick. Like you get a sore throat, you get coughing, your body will will sabotage you. You need to rest. Oh, you're not resting because you have money. I'm going to make you lose money so you can get some rest.
Oh, no.
That's not what I want, though.
Right.
But I'm going to do that because I'm your body and I'm your subconscious mind. And 95% of everything you do is driven by me. So guess what? You're going to press buy instead of sell, buy, and you're going to be in bed.
Wow.
So it's like, okay, I'm not going to trade, right? Or so that's getting plenty of rest, being in good physical condition. Also, if you have a fight or argument or you're pissed off at someone, you want to have good in the emotional state where you start from a state of neutrality, a state of peace, opening with prayer or meditation, starting from a quiet place. So you can let your intuition, you can let this Holy Spirit or God talk to you and guide you so you can be in tune with that higher self, right? Without the noise in the background that maybe still playing and you're still fussing at the boss that did you wrong.
Right.
And you really need to, you want to be at the highest mental state when you approach the market. So being at peace with your family, being great with your wife, your dog, your cat, your boss, being healthy, getting plenty of rest, having that loss limit and that win limit, very important. I find if you do that, and then also positive self-talk yourself as well.
Okay.
You trash talk a guy in the basketball court to get into his head to make him miss a brick, miss a shot, But
like when you're the player and you're the only player, then you gotta talk to yourself.
Right.
And don't talk smack.
You talk smack to yourself. You suck. That's just like you always doing that. I don't know, this always happens like that. Well, yeah, it's always gonna happen that way.
Especially when you're saying that.
Yeah, you're saying
speaking things into life and death in the part of the tongue.
Exactly.
Yes,
Proverbs 18. Yeah, you gotta talk yourself up and really get yourself in a high vibration of prosperity, abundance. You have to have it before you even make it, right? So because everything,
mindset, self-talk, energy, all these things, vibrations, all these things are real and serious things when it comes to getting in the right state of mind and having the peace within to even just to recognize a good trend or a good and when to get in, when to get out, things like that. All
those things that's what creates that synchronicity, that magic, that you're in the zone where you're able to operate in that high vibration. A lot of people lose money and then they feel guilty. Had guys blow up, Apex had a guy just blow up like 6 accounts. He had 6 of them all lined up. He blew them all up at one time.
Oh, wow.
And then he felt bad about it. I'm like, you need to get up out of that vibration because guilt, shame, frustration, disappointment, sadness is a low vibration. And so guess what? You're going to create more low vibration.
Oh, wow.
One vibrations create vibrations.
Yeah.
So, someone will take their money and maybe there's money for the car note and they lost it trading. Well, I feel guilty, I feel bad. If you feel that way, you will continue to feel that way. So it's important for you to change that vibration. I think that's the most important thing that I learned in trading. Keeping that high vibration, even though it may seem like a lie, tell yourself the lie because you can't afford to get below. There's a Hawkins scale of vibrations, starting from high, from euphoric and happiness, and then it goes all the way down to shame and anger and frustration. It's like colors associated.
Okay, yeah, I've seen that.
You seen that, right?
Yeah, I've seen that.
So you're operating that high blue, indigo area, right? And then all of a sudden magical things happen. All of a sudden, the Bank of Japan is going to cut rates and no one else sees that move, and all of a sudden you're seeing all these things line up. The charts will start lining up for you when you start seeing it. When you're in the vibration, it allows you to see it.
Right.
Like
you said, letting the Holy Spirit lead you. I believe. I believe. Hey, hope the Spirit is in the algorithm. The Spirit is in the markets. You moving.
Yeah.
Moving on Earth.
And we're not victims. We're coming from African American. Man, the man's holding you down, and the man and this. I don't feel safe because of this. You're creating a vibration. You have no clue.
Yeah.
You've created a vibration of victimhood, which keeps you down there. And so guess what? It just piles on you. You can see what the system's doing, what the man is doing. Yeah, because you are creating it.
You are the man.
You are the man. You the man.
You the man.
No, you're the man.
Right.
You're the man, right?
That's what I tell you. It's important that, you know, how we frame and name our circumstances.
Mm-hmm.
Like, you know, you may be in a situation where it may not be your best season or whatever the case, but it's about how you
go through
how you frame it and how you name it. Is, you know, I'm gearing up for a win.
This is a lesson.
I'm learning. Yeah, I'm learning.
It's
Things like that, rather than
it's a tragedy and woe is me.
Woe is me,
right.
and all these type of different attitudes that people have towards.
And then a lot of people, like, you know, on a racial thing, they go, well, hey, you're acting white. Well, guess what? Who's at a higher vibration? Who's on top of everything, right?
Uh-oh.
It's not about color. It's about vibration.
Okay.
Now, what vibration? I'm keeping it real. You gotta keep it real. You'll be down the bottom, right?
Right. Well, that's actually our next topic: highs and lows.
Right.
So, you know, talk about blowing accounts and vibrations and things like that. What's been maybe like the biggest loss that you've taken?
Biggest loss is when I left teaching in '98. You know, I was trading options, and I took my retirement account. You know, the California teachers retirement, and I got like $15,000 or $30,000, right? Mm-hmm. And I put it in the market, and I turned it to $300,000.
Wow!
Right?
How long?
That
How long of a time?
Like 3 weeks.
So you turned 50. You said 15,000.
Yeah.
15,000 to 300,000.
Right. I was trading like Amazon. That Amazon was high flyer, fast moving. You know, making like 10 grand a day. Boom, 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 boom. You know, in fact, the option, the broker would write me, you're responsible for your account. You're trading with too much leverage. And it's like, I'm making money. So shut up. Right. But it's, you know, the 1998, everyone was making money. Right. It's kind of, you know, the .com bubble. Everything was like, everything's going up. Right. .com. 2000 crash humbled the mess out of me.
Uh-oh.
Because all of a sudden it's like, you know, I was trading Yahoo, the predictive function, which I didn't know about, was right there.
Okay.
Couldn't see it because I didn't know it. Right. And then the thing A, B, C wiped out my option account. I had to go ask for my job back.
Everything. Oh, so that was $300,000.
Yeah, so, you know, the Range Rover gets repossessed, the house gets gone, you know, and I got to go back to the district and ask for my job back.
Wow.
I said, I'm going to go back as a high school teacher and teach you math or something somewhere. But yeah, it was very humbling, you know, and that's why I saw a mentor. Or, you know, I did that without a mentor. I just did this for this. I got a, you know, Yahweh. It was really, you know, how I got into that trade. That's a whole different story. But you know,
so how you got into the trade?
Yeah. It was based on Billy Graham coming on TV talking about Yahoo for Yahweh. That Yahoo means Yahweh.
So I'm going all in on Christ.
I went all in. I made the $300. Hey, you know, it's like, hey, you know. I kept going in, right?
So buying all the dips.
Buying all the dips, you know.
As Jesus, Yahweh was in. Oh yeah, you just keep dropping the price. I'm getting in.
And then it goes up, you know. And then I got out, and then my wife goes, "Yeah, she get back in." Like, no, I don't think we get out. Like, I'm gonna get back in. Whoa, that wasn't good. That was
wow. So Yahoo had a pretty reckless.
I had a coming to Jesus meeting.
Exactly. I'm gonna have to look that up. The
call,
Yahweh
right?
for Yahoo for Yahweh. I'm gonna have to look that. I haven't heard of it.
Right. That you know, that's why, you know, these internet companies, Google, those are the biggest number. Yahoo was the, you know, it was not Yahoo jumping off a cliff like that. Yahoo, no, they knew that there was a biblical connection between that, God being the God of the internet.
Okay.
Yeah.
So it was.
There was a connection, right?
Okay.
It's like Google means like a billion, right? A number bigger than anything else.
Oh,
right. Infinite, all infinite. Google, yeah. What's the biggest number? A Google. The Google is a number. It was supposed to represent the number an infinite number that's greater than all numbers. A Google.
A Google. Wow. I didn't know that.
Okay. Yeah. See, that's all like from the 80s and 90s.
Is that like Latin?
Latin? No, like a bazillion. That was a made up word.
It's just a number.
Somebody just made up a word. A bazillion. They go, what comes after a bazillion? A Google.
A Google. Right. Yeah. Wow.
Well, I think there's some science behind it where they actually, it's supposed to be represent a number greater than all numbers on Google.
Wow.
And so that was Yahoo.
Fun fact for y'all.
Right, fun fact, right? So you didn't know, right? Boom, right?
All right. So on the flip, what's been maybe like the greatest win or
the greatest win was that I actually took the account that it had like $100,000 in there. I took 100,000 to $1 million in like 3 days, and I actually streamed it. We're hitting. And I was getting heavy, like that 9,999, like, oh my God, went down 985, like, finally go, close it. They closed like 1,000,000 and $1 or $2, right? So that was a pretty exciting.
So just a few days.
Right.
Wow.
So.
Hey, there you go. They say it's easier to make, when you know how to do it, it's easier to make 1 million than it is to make 100,000, or it's easier to make.
And that was recent. That was like a couple of maybe a couple of months ago. But I want to make my first million. I actually created a compound trading spreadsheet. Made a spreadsheet because all you need 10%. If you have $10,000, all you need is 52 trades at 10% to make $1 million.
Wow.
Right? 10%. Whether it's 10% a week or 10% per day, but 10%.
So that's a compounding 10% compounding
52
strategy.
times.
52 at 10% compounding strategy.
Mm-hmm.
I think we might have to throw that in.
Yeah, maybe we made that a little special offer there. I got the spreadsheet. I guess right. You give your reviewers a spreadsheet. I have the spreadsheet, and you have to go with it.
Okay. Yeah. Okay. So I saw you trade crypto one time. That was a pretty crazy win too.
Was it Ether? Or Bitcoin?
It was Bitcoin.
Bitcoin, yeah.
It was Bitcoin, and it was. I don't know what I was seeing. I just saw that you had made, you had flipped that account crazy. I think it was with Cut.
Mm-hmm.
And y'all took that account. It was some strategy that y'all had come up with. And,
right. Yeah. Cut's a great trader. He did 473% in 1 day on my birthday. I'm gonna double this account. He over quadrupled it in 1 day. Mm-hmm. And that's why I said, you know what? I'm hiring you as my trader for the New York session. You run our New York trading room because he's just been an amazing trader. Cut the rope.
Okay.
AKA JD. Rogers.
Yeah, that was an amazing trade. I think you recorded it. I don't know if it's on YouTube or something like that. But yeah, that was. What was do you remember the numbers on that one?
Was that like 60,000 or 70,000, or was it in the?
I don't know. I thought it was in the million. I thought it was in the million.
Oh yeah. That was like the $6 million one. Right?
Yeah. That was. Tell us about that one. Can you talk about that?
Yeah, it was a system that we used. It was Pip Run applied, and we just saw institutional order flow coming in using the predictive function, and like, this is when we back up the truck, right? Like I told you about the euro, it's coming in. We all need to get in now. That one that got me barred because 20 people made money, and so that's another. We could do that. Save that for another podcast. But yeah, it was lining up where everyone was coming in. They suck people on the bid, get them all to get out short.
Right. So more people this is at a point where people it was on a short.
Right. Everyone got short.
Oh, everyone got short. Okay, so they were selling
liquidity sweep, right? Long wick candle, full body, get you in on the south side, right? Suck them in, and then take it north and hit their stops. Because their stops are the crypto and forex market are stop driven markets. They're driven by stops.
Wow.
So the market doesn't move unless you have enough people on the wrong side of the trade. So the whole idea is deception. Get everyone on one side because it's a pyramid scheme. Losers at the bottom of the pyramid pay winners at the top. So you need a bunch of losers on one side, right?
Yeah.
So
I say the majority of traders are losers. The majority of traders lose more than they win.
If you use average tools, if you use what the majority uses, you get average results. And the average trader loses, right? So use what everyone else uses. That's why I tell people you don't lose the stuff I use because it's not out there unless you're a part of my community. So, because why? Because we see what other people are doing and they're doing the wrong thing. my whole goal is to teach people how to see things as a market maker, as we saw it on the desk. Right? It's like, oh, they're coming in, they're going to get smoked. Oh, there it goes. Oh, phone starts ringing. What happened? Like,
you having to deal with the people just, I don't know. What do you do? What do you say? Like,
I'm sorry about that. More buyers than sellers. Sorry about that.
That's it.
I mean, that's
you try to get them in again.
That's the the boilerplate that you tell every client. You tell them how it really operates. The whole idea is keep the terminal, make them put more money in so they can. That's all.
So let's explain that, because I don't know if we might be talking.
Okay, right, we'll break it down for it.
Yeah, let's break it down. So you worked at a
firm, yeah, and
what kind of firm?
A broker, retail forex brokerage.
Forex broker firm.
Right,
okay,
right. And retail are usually wrong. So
retail traders.
Yeah, retail traders. Yeah, most people are retail traders, right? And so they're so wrong that they actually had an indicator. They called it. They used to call it the dumb money indicator.
Uh-oh.
But it was a sentiment index. They have the same thing for stocks, right?
Mm.
And when people trade odd lots, look at odd, like you usually buy blocks of 100 shares of stock, right?
Okay.
But they can tell if amateurs are trading, if they're trading 1 and 2 and 5 shares or 3 shares of stock. And usually they can take those odd lots. They see where the odd lots are positioned, and they know that that's the wrong direction.
Mm.
So if everybody is short Tesla or selling Tesla, and there's like 1 and 2 and 3 shares being sold, you know that it's a buy, right? Okay. And you see institutions buying blocks, right? In the same way in the forex or any instrument where you have people on the wrong side of the trade, they're amateurs, and then they'll sell that information to institutions. Well, our traders are currently, maybe they're selling euro dollar, right? Mm-hmm. And they'll go, okay, that's good. That confirms that we should do a whole long, right?
Why? so just pretty much they look at what the average retail traders are doing, mm-hmm. and they say, because they have more power, they have more money to push the market in whatever direction they want to push it.
Yeah, they're usually smart. I mean, and then there's something people use COT, or the commitment of traders.
Okay.
That's the futures market puts that out, but it only comes out on Mondays, and it shows how leveraged traders versus non-reported versus hedge funds are actually trading. And usually, if everyone's on one side, if the retail's on one side, it usually means that the price is going to reverse. Mm. Yeah, so
they don't know that,
right? So people talk about technical analysis, they talk about fundamental analysis, but they don't talk about sentiment, which is huge. Just like that third leg of the triad, where you find out like where does mom and pop investor, where are they at? Mm. And usually they're wrong. Usually they're selling when they should be buying. They're buying when they should be selling.
Wow.
Right.
So how do you get retail trade? Do retail traders know that they're retail traders?
No, they think they're geniuses. They think, or they get into a chat room with a bunch of people and they all agree. I love going to chat rooms because guess what? I'm the shark. I go in there. We're selling this. Oh my God, here we go.
I'm gonna get all this.
Yeah.
Everything that you guys are investing is about to come over here.
Right.
Because they don't really know. My journey when I first got into trading, it was through a company, and it was influenced by groups of people, but it was there were instructors and things like that. Like I won trades and things like that based off of what the instructors were teaching, mm-hmm. but I didn't, as far as when it comes to how they traded, mm-hmm. I never learned how to trade. I just was following, basically copy paste. I get the signals.
Right. And you're like a dolphin getting the fish, the aquarium.
And I just take it, boom, right. and I get out. And so, and I think that because it wasn't just me, it was a bunch of other people doing the same thing. And mm-hmm. so I think a lot of people are, they just follow. Like you said, they get into a group.
Because it's easy. It's people who are inherently lazy. They don't want to work. If they can get something for free, then the market's
not just free, but free and right now. Free and fast.
Free and fast, right? And the market knows that. The market's like, oh, you want free and fast? Like, I got something for you. Take this. Oh, what happened? Like, You know, it'll win like a little bait, like a mouse trap.
Right, bait you on
bait, and then right,
take it. Wow.
Right. So it's important to know like why is it moving? Where are we in the count, which is very important. I always say, why are you taking this trade? Oh, I think it's gonna go up. You think it's gonna go up. What is the count? Mm-hmm. Well, I don't know. But you have no edge. You have to have an edge, something that's going to differentiate you, make you different, that stand out from the other 90% of the people who are going to lose. Because you're using what they use, you're going to get their results.
Right.
So what do you have that's different? Well, I have order blocks, or I have SMC, or I got blah, 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 blah. Is that a real edge? You know, so you have to have an edge. And when you have the edge, it's like you slice and dice the market.
Get it how you want it. You get it how you want it.
Yeah. Yeah. So
let's talk about today's economy. How, you know, as far as the market goes, you've been trading since the 90s. Have things changed? I've noticed the world has changed since I was born in '94. But I've noticed that, you know, because when I was young, I always had ideas of being rich. Basically, my dad told us at a young age that, you know, in the future there would be no middle class, that they would be eliminating the middle class, and so there would pretty much only be rich and poor.
Right.
And so as a young child, I always knew, oh, okay, well, we're gonna be rich. I'm gonna have to get rich.
Make a choice.
I made the choice as a kid. Like, okay, we're gonna be rich. Yeah. You know what I'm saying?
I know that's right. Boom.
That's it. Yeah. When he said that, you know, basically all the way, like, okay, well, we're gonna be rich then. You know what I'm saying? Yeah. So
who was even thinking
rich. So, you know, and I'll, you know, I would say that the Lord blessed me with that vision and these visions to, okay, now He's showing me how throughout my life, how am I gonna do it? So ideas and things like that. And so I've watched the world change. I've watched, because it got easier. Now that I'm 30, I'm like, it's so easy now to get rich. It's like He made it easy. He made it easy for us. Yeah. And that's how I look at it. Like, He made it easy for us. I used to not really know. It
was all kind of secret and shrouded.
Yeah, exactly. And it's like, it's so many out. There's plenty of ways to do it now. Mm-hmm. And so, with me seeing that change, how has the market changed? And, you know, what do you see? How does the market look today? What, you know, if you're looking at the market today, what are you looking at? If that's you know, or maybe, is that a good question?
Yeah, that's a great question. Okay. Because really, you know, what we trade has changed. We can trade weekly options. We can trade hourly options, and, you know, daily options. We can trade crypto. So we have more choices, but the foundation of all markets, fear and greed, are the same. They have the same since, you know, the 1800s, 1900s, with Lefevre and with the reminiscences of a stock market operator, where he was reading the tape. The tape is the same. How we trade, what we trade, are different. So my tactics haven't changed in 20 years. It's the same thing. You know, it's like same old thing. It's the same thing, because the market's still, you know, Ralph Nelson Elliott studied 75 years of price data, and he found out there was a 5-wave pattern for 75 years before. And he studied this in 1934. And things have not changed in 90 years.
So what should traders be paying attention to? What should they be paying attention to right now? As far as you mentioned earlier that system is important. You just mentioned, you know, the count, Elliott count. So what is it that they should kind of, if you had to focus in on one or two things, what would those things be as far as, you know, to survive? Just longevity. This is what I want to do. Even if it's on the part-time, full-time, whatever, what should they be paying attention to?
They really should focus on the economic calendar and what's going on. You know, there's a movie called Trading Places with Eddie Murphy. He talks about trading the crop report, and basically, you know, he goes with his bum on the street to becoming this futures trader, right? And he talks about the crop report. and that at 8:30 a.m. this crop report's going to come out and the market's going to go crazy. They have this insider information. It's a great movie. It's from the 80s, and I advise everyone should watch Trading Places. But that event happens every single day because we have a news cycle, an 8:30 a.m. news cycle, and a 10 o'clock news cycle. Whether it's non-farm payroll, we just had non-farm payroll where it came in 177,000 jobs created versus 135 forecasted. And the markets went nuts. So if you're trading the market at 8 a.m. and you don't know why euro dollar spiked 90 pips in one direction, you got your head in the sand. You don't know what's going on. Okay. You're getting blindsided by the news. So looking at the economic calendar, number one thing, because that's the fundamental backdrop. I look at technicals, but I look at the fundamental backdrop. Next thing is trend direction. You want to know where direction the major trend is for your time horizon. Okay. So if I'm trading off of an hour chart, my higher time frame is usually 5 times bigger. So I'll look at a 4-hour chart as my trend direction. Or if I'm trading off a daily, then I want to look at my weekly, right? So I'm always looking at a factor of 5. I'm trading off a 1 minute, I'm looking at my 5 minute. And I want to take trades in the direction of that higher time frame. That higher time frame is like my guiding light. In our course, we call it the compass chart. Okay. The compass chart, we only trade the direction.
This is T, by the way. This is you giving a T.
No, yeah, that's
trading off two time frames. Trading off 2 time frames. That's key. A lot of people don't.
Don't trade like a pirate. You know a pirate? He has one eye. He has one hand because he got eaten by a shark, right? He got one leg, he got chopped off, right? He's a handicap here.
Losing your body parts in the market.
So you look at one chart, you're going to lose parts of your account. Why? Because, even when we used to have the 3D glasses back in the day, one was blue and one was red, it gave you this perception like, oh, look, it's 3D.
Wow.
Right? So by looking at 2 chart time frames, you are looking at it the way it presents itself. And actually, I like to have 3. Alexander Elder wrote a book called Trading for a Living. He called it the triple screen method. Higher time frame, middle time frame, and lower. A lot of people don't have enough screen space for 3. So I just do a 2 screen, a lower time frame, a trigger, and a higher time frame, my compass. Take my trades off my trigger, my risk reward. I can have 5 to 6 pip stops on a very small time frame, but trade the direction of the higher time frame. So I'm this lazy river. When the river pulls back, I just jump on the river because the tendency is for the higher time frame to keep moving in one direction. Wow. And most people make their mistake trading against the higher time frame. They're trading like a pirate, right? So they look on their phone and they see a red candles down. They think it's a downtrend. You zoom out, that thing is just a pullback in an overall uptrend. You get short and that thing breaks out to a new high. Oh, my account got blown, right? But if you trade in the direction of the trend, you can have a bad entry. The trend will bail you out, right? Because it's just like a lazy river. We have this thing called Schlitterbahn in Texas. Get on there too, get yourself an adult beverage, get back, and it just goes, right?
It's a lazy river.
Yeah, it's just lazy river. You just ride it, those green candles up, red candles down, right?
So it's more, when you got the right system, it becomes more simple, huh?
Right.
It becomes more simplistic.
So all my strategy does is help you find those really low risk opportunities in the direction of that lazy river. You find that river, you just go with it, and it's like betting on the sun rising in the east, right? It sets, sunset, sunrise, right? You gonna bet on the sun not rising,
right?
Sunset. So with the higher highs and higher lows, is an uptrend, right? Sunset, sunrise, sunset, sunrise, right?
So it's systematic. It's a system, and
right. Now, 18 months out of the year, you have an eclipse where the sun doesn't come up, right? But that's predictive function tells you, hey, the sun is not going to rise. We're going to get a reversal, right?
Right.
But people think retracements are reversals, and they're not. They're just a pause, a commercial.
And so that's what happened when you took that. When you took that loss, that 300,000 loss.
Right, exactly.
Okay.
Right.
Okay, so as far as the 2025 economic landscape. We got Donald Trump in the office. Inflation, okay, thumbs up. Go
Go 47.
Go 47. Hey, I feel you.
Look, I'm just trying to get paid. I don't care about liking nobody. I don't need to like the guy.
Exactly.
Make me money. He made me money the first term.
He made you
I
money.
don't want no hate mail. Don't send me no hate thing. I'm about the money because I loved Obama. Obama shut down the Forex market.
Oh, really?
The Dodd-Frank. Yeah, the Dodd-Frank and the leverage and all that stuff destroyed the Forex market. So I'm not voting.
What is it? So what's the Dodd? What's that? What's
Dodd-Frank? Well, because of the financial meltdown of 2008, and so they reduced the leverage for mortgage. You had to, you used to, state your loans on different, state your income for loans and things like that. You couldn't. You have to
actually show statements and things.
Right, and then in the Forex, they lowered all the leverage to 20-1. We used to have 500-1 in the United States, right? We used to have 100-1 in the United States. We used to have no FIFO, first in, first out. There's a lot of different rules, but it killed the Forex market because people didn't want to do all those restrictions. They just went, and all the U.S. brokers went out of business except for two. So that's how one president can do something that, you like that president, Obama, hey man, but he hurt my industry, and I gotta eat, right? I can't eat black power,
So what is it that it's okay? So we got the tariffs going on. We got inflation is a big thing, and then obviously just the name Trump itself.
Right.
But so when it comes to these tariffs, is that what do you feel about the tariffs?
It's all negotiation. Everything is about the art of the deal. I read in fact, 1994. That's when I think the art of the deal came out.
Okay.
And my wife gave me a copy of that for Christmas. The art of the deal. And everything is about negotiation.
Yeah, right? I actually listened to the Art of the Deal twice not too long ago.
Yeah,
it's a good book.
And when you negotiate, you don't let everybody take advantage of you. And China's been taking advantage of us for years, and Europe too. I mean, they have all these restrictions against us. And basically, my dad was a worker in the 80s, and his factory got closed down, lost his job. He became a pizza deliverer. Because all the industry got shipped overseas. Why? Because it was an unfair tariff environment. It was cheaper to manufacture overseas than here. So just reversing that and bringing that back.
Right.
And so that's going to be the tariffs. I mean, they've already collected probably $600 million in tariffs already. Money coming in that people got paid to come into our markets.
Right.
I mean, we drive. That's why people watch non-farm payroll. People watch the American worker because they sell their Lexuses, their Xboxes, their Sony PlayStations, all that stuff Americans buy. We consume 30% of the world, but we make them 2% of the population.
Wow.
Right? So they should pay to play, right?
Definitely.
Right? So it makes sense, right?
Yeah, it makes sense. It may, from what I'm hearing, it may cause certain things, the price of certain things to go up temporarily.
Maybe it's a little plush toy from China.
Do
you really need that anymore?
Well, I heard, what about devices like phones and things like that?
Well, they had carve-outs and exclusions. You got to understand that China depends 100% on the United States. If they don't sell to us, there is political unrest and things going on in China. So they're going to force them to come to the table. And we're going to work out a trade deal which is mutually beneficial for both parties. That, China's going to benefit.
So after a while, when they get done trying to fight, they got a little war going on right now.
I know, but they are people of dignity. They have 5,000 years of history. You got to give a little bit of respect on the world stage. And a lot of times we China this, China that, but we don't treat them with respect, and so they got to save face. They got
push back a little bit.
They got to push back. They can be rolling over for the U.S. I understand that. It's like you're a man. I'm not going to be disrespecting you and making you feel I got to treat you as an equal partner and work together as a partnership. But sometimes you have to go to blows in order to come to that. Right. So the short term stuff, it might be
a little.
You like sausages, right? I love sausages, but you see how they're made? You see what they put in it, right? Or this intestine, that piece of organ, something. right? So this is all this tariff. It's real. Like, yeah, give me a jalapeno sausage. Oh, let me show you how to make it first. No, right? Yeah, that's how the tariff thing. It's ugly, and most people are not sophisticated enough to understand that this is a chess game, and most people are playing checkers.
Yeah,
they want the short term. This is like moves,
strategic.
En passant, and this is big time strategy. So we gotta sit back and let the person who's been dealing for like decades, because
big deals.
Yeah, he's been talking about tariffs since 1987.
Yeah, I saw that interview.
Yeah, he's been doing so. Every time he's brought it up, we've had things kind of happen, right? So I think now is a time for a reset where everybody is treated equally. China benefits, but not at our expense. We benefit. It's a win-win for everybody, because why you're making money off of stuff. So why do you need to go extra?
Exactly.
Right.
Paying extra for something that we're already.
Yeah. Why are you?
You're already selling. You're already producing and selling.
Mm-hmm.
Why add these additional? Make it more difficult.
Making these barriers, but there has to be. It's ugly. No one likes the blow, but that's what leaders do. They go to heads, and then after that they shake hands, and they that's how it is, right? The market. And also he wants the interest rates to fall. Mm-hmm. Every time they interest rates fall is due because the stock market crashes.
Okay. And
Jerome Powell doesn't want to. He thinks, cutting rates is inflationary, so he's not going to cut rates. And Trump's like saying, you need to cut rates, but he won't cut rates. So let's say I'm going to raise tariffs 145%. Stock market does what?
It drops.
Where does Jerome Powell go? What does the bond people do? They get out of stocks, they jump into bonds. Bonds and stock market have an inverse relationship. Okay. The interest rates fall when people buy bonds. They're leaving stocks because stocks are going down. They're afraid. And stocks fall. But guess what? Bonds, the interest rate on bonds, the yield goes down because people are running for safety.
Oh, the yield goes down.
The yield goes down. The price goes up, but the yield goes down.
Oh, wow.
So guess what? We went from 4% to like 3.8 or something on the 10-year treasury. You watch that treasury now. You watch the treasury. That's the bond market controls. I used to live in Houston, Texas. My neighbor, wonderful sister, and she goes, "What do you do?" "I'm a forex trader." "Oh, I'm a bond trader." I go, bond traders control the universe. "No, you forex traders are smart too." It's like, we may be smart, but you, sister, you control the world. Bond interest rates drive the world.
Oh, wow.
Yeah,
I didn't know that.
Yeah, that's why you follow that TNX on the trading view, TNX, 10-year treasury note.
Right.
Plot that TNX and put on the DXY on top of that, and you can see the correlation. And when because why the government offers IOUs, right? They're getting people to buy my bonds. When they buy the bonds, a bunch of people buying the bonds, they don't have to offer them a high interest rate, right? So the interest rate starts to fall, the yield falls.
Okay.
So think when the stock market crashes, it's a way of actually lowering interest rates, which increases borrowing, right? Because people can refinance or buy a home, right? Which stimulates the economy.
Right.
Right. But if you don't understand how all that works, you don't know what you're talking about. Right. Shut up.
Most people don't.
Sit down and shut up.
They base it off of emotion, how they feel about him or what he might have said. And
talking heads on different media outlets.
Yeah, fake media.
They want to make people look bad. Yeah. And then look, price of egg. I bought a dozen eggs for $2.97. Limit 2. I went and bought 2. I got gas.
You talk about eggs, right?
Right. So the price of eggs are down. Eggs are down. Everything's down, right? Unemployment, 177,000 jobs created versus 135 forecasts. It's the forecasts are off. Who was doing the forecasting, right? So everything is, if you're not into, that's when you know the economic calendar, know what's going on. Because if you rely on legacy media to tell you what's going on,
you're screwed.
You're screwed. They're telling you whatever they want to
because they're trying to push a narrative.
They get what they want, and you just want to make money. I don't care what if it doesn't make me money, I don't want to hear about it.
Right. That's actually my next question: the importance of financial literacy and skill development in this era. How important is it to pay attention to be financially literate, pay attention to what's going on, and to also learn and develop new skills in this area? How important?
All that's primal importance. I think, whether you are an artist or a musician or something, you need no business. You can't say, well, I'm just an artist or I'm just a writer. I have a financial. You can't even trust financial planners. I've seen guys put older people in things where they don't make any money. They make all the spreads and commissions off of the activity, but it's going negative. Financial planner, they got a certified financial planner, and they've got, right? Because it's not aligned, right? They make money whether your thing goes down or around.
Exactly.
Right? So they don't care. They're not going to do the extra work for you. So you need to be aware of what's going on, or what's going,
in the market or in the world in general.
Mm-hmm.
And so as far as skills, trading is a skill. Learning, the markets and how to technical analysis. Mm-hmm. So you got technical analysis, and then you have fundamental analysis. Mm-hmm. And so you're saying that fundamental analysis is slightly more important than technical analysis.
You need to know what the backdrop is. It's like when my daughter, she made she does stage production, so she created the sets for this opera. So you get the opera sets, very important for creating the mood, right? And then the actors on stage, so they create a stormy looking background, and it creates a mood of sadness, of, scary or mysteriousness based on the setting, right? So if you have a risk on environment where stock market's going up, there's employment, there's stability, that's a risk on, allows people to take risks, right? There's risk off where people are scared. North Korea's firing a missile, and maybe there's an earthquake, and maybe there's a revolution, and maybe there's an assassination or something. That's a risk off mode. People will run to the Swiss franc. They run to the dollar. They'll run to bonds. They'll run to safety, and they'll sell off high-yielding assets or high-yielding currencies like Australian dollar, New Zealand dollar will sell off during those times of geopolitical instability, right? But if you don't know, well, why is this, North Korea, they launched some rockets over Japan. I go, guys, yen's going to rally. Yen will rally during times of unrest or even during
I've seen that. I've got paid.
Yen's your friend. Yen's your friend, baby.
Just going on. It's just always going on.
I told my kid, you almost got dinged yen, You almost got dinged. I mean, made so much money on the yen, baby. Like,
Yen McLeod.
Yen McLeod. That's what her name was going to be. Like, no, Daddy, no. So,
that's a good one. Yeah, I made some money off yen.
Yeah, right, because people are afraid. Sometimes you can see it, and then, the Japanese yen will start getting strong, right? The yen pairs will sell off, but the yen itself will get, right, because of the fear. And the carry trade, there's an unwind where people borrow yen. The interest rate is like 0.1, and they borrow yen and they buy high yielding assets, right? So maybe you can borrow at 0 and then buy something, it goes up, and then you pay it back, right?
Exactly. So high yielding assets. Let's talk about assets for a second, because I don't think people understand. Our people, we got this. It's a new wave of people coming. It's a whole new way. Every time I go to a graduation, I just be like, so many these kids are coming into the world. Basically, they coming out to school and they getting into the world,
right?
And so people don't understand the importance of owning assets. And so I've created a line of digital assets, but assets. What do assets? What are assets? What do they mean to you?
Well, things that actually are that you can put your hands on, like real estate, like gold, like art, or antiques, right? Physical things that you have, gold, silver, bonds, those kinds of things. And I remember watching something about how the difference between why Jewish people are so rich. And I hung around. A lot of my best friends are Jewish that hung out in the valley, and they give assets. We give appliances. Here, I got you a phone. I got you a watch, right? But they get they get bonds, they get gold, they get silver,
Wow.
they get stock certificates, right? They get assets.
And you're saying they give to each other.
Right. I tell my daughter, can I give you some stock instead of, no, I want to learn the latest gizmo, right?
Right.
I want an iPad. But then, I think if I had gotten Apple stock instead of, computer games,
I'd be
a bazillionaire, right?
Exactly.
Assets, Apple was $39 a share back in the day, right?
Wow.
And it has doubled and split and bubbled and split again.
Three times.
Right?
I don't know how many times.
That's an asset, right?
Exactly. So we just my son's birthday, his first birthday just passed, and so I did a little fundraiser, and for as a gift to anybody that participated in the fundraiser, I gave them assets. I gave them my digital assets. And so, with you saying that is like, I'm glad you said that on camera. It's on camera, y'all. I'm not crazy. You know what I'm saying? And so these are assets that are going to grow in value over time. It's like buying stock. It's like it's like buying stock at the lowest price possible. You're buying it, at $10. A year later, it might be at $15. It might be at $20. So
it appreciates.
It appreciates,
okay.
And then over time, like you said, it's a stock split. It may basically a stock split. It just so if the stocks are worth if it goes from 10 to 50, and then they split and go back to 10, then now you have 5 stocks. You own 5 shares rather than just one at 50. You own 5 shares of stock at $10 rather than just owning one at $50.
Mm-hmm. So
you basically just 5 times your assets. And so, it may be a little, you may not understand right now, but assets are where it's at. Buying assets and owning assets, like you said, as far as physical assets, gold, silver, real estate, art, stocks. All these things are assets, and then so nowadays, digital assets are becoming an easier way for anybody to become wealthy, to create wealth. That's what it's all about. It's about creating wealth. It's not just you're not just gonna have people hit the lottery, but
or they have high-paying jobs. Hey, I make 6 figures, but do you have wealth? You don't have
exactly
right.
And so you have to use that money that you're making. If you make 6 figures, you use that money to create wealth by buying assets, and learning new skills and developing your skill sets and things like that. So from a trader to an educator, you went from being a trader to did you go from trader to educator or educator to trader?
Educator to trader?
To trader, educator?
And then trader, educator.
Okay.
I taught school for, from 89 to 2005 or so. So, so I spent like 16, 17 years in education, teaching English. And then I started trading, and then I have the brokerage found out that I was a teacher. They go, well, why don't you teach people how to trade, how to use our platform? So I was head of education at a brokerage. So I taught people how to trade. So I was teaching people how to trade through the brokerage, until the system wasn't really too good to teach people. So,
right. So it wasn't ironclad just yet.
It was too good. I'm like saying the people.
Oh, it was too good.
Remember how brokers are set up, or how losers pay winners,
right.
And so they benefit. If you have a dealing desk operation, they benefit from losing trades. So if you teach people how to win,
don't win.
It's like being a card counter and working for Bellagio. We're in Las Vegas right now, right? So imagine me, I'm a card counter. I'm going to teach your people how to. Get out of here, right?
Exactly. So it's not good for the house.
No, it's not good for the house.
It's not good for the house.
Exactly. So
your system with Elite Traders University, your systems teach people how to win.
Exactly.
And so they don't like that.
No. Unless you're in the area, where you see the Dumb Money. You saw there was a movie called Dumb Money.
Okay.
It's all about the rise of GameStop. GameStop, right?
Okay.
Where everyone was on the other side of the trade. They were trying to short it, and it kept going up, and the hedge funds got. Well, he was teaching people how to win against the market, and they
Wait,
shut.
you talking about when GameStop did that
You're right.
that big thing?
No,
that
it was a
did?
Reddit. It was a guy in the Reddit.
Yeah, okay. I remember.
Roaring Kitty.
Got you.
Roaring
It was a
Kitty.
few years ago, maybe 10 years now.
No, GameStop was like a couple of years ago.
It was a few, maybe 3, 4.
Yeah, maybe 3 or 4. It was during the pandemic.
Okay, yeah, I remember that.
Yeah. Mm-hmm. GameStop was rallying, and because they got a bunch of guys on the side short, right? But then because they were going to short it down, but then people started buying it and driving it into their stops, right? Stop-driven market is when it ran away.
Yeah, it ran away.
Yeah. But
it ran.
But sure. they shut down his Reddit, right?
Because it was teaching people how to win.
Yeah. And then they put him in front of Congress and all this other stuff, right? So the system is it's different. You've got to fly low to avoid the radar.
Wow. Yeah, that's kind of unfortunate, but that is set up that way.
Right.
So
that's what makes you a W-2. They want to keep you W-2 is second class.
Mm-hmm.
You're either a producer, you own a business, or you're a W-2, which is worker second class.
Is that what that stands for?
Oh, I got a W-2.
Uh-oh. Wow. I did not know that. I didn't know that.
I've been around a while.
Dropping bombs on them.
Me and Fred Barney were
So W-2,
roommates.
if you have a W-2 job, that means you are a worker second class. Second class. I mean,
Yeah,
you just think about a plane.
There's no disrespect in that.
Right, it's no disrespect. We all, but as far as
you're making money, you're paying taxes.
when you think about plane, when you just think about a plane, people talk about first class. That's the class that a lot of people aren't. Most people don't fly first class.
They fly Frontier in the back and the econo side.
The economy,
or soul plane, like a box of chicken.
Wow. And so that's so 1099 is more of like contracting things like that. What about other
when you're a business owner and you own a business?
Business owners.
And you work. You can be a W-2. You work for your business,
right?
And
you pay yourself.
You pay yourself very little because your company is so cheap, but the company gives you a company card. You don't take vacations. You take company business trips.
Exactly.
Right. We don't go out to dinner. We have
business meetings, right? Luncheons, and things like that.
Everything becomes an expense that can be expensive, and they don't care because you're a job creator. Why? Because you're going to hire a W-2 who are going to pay into the system. So so that's not fair. It's not fair. Yeah, but Bill Gates and these guys, they hire hundreds of thousands of people who pay taxes who are W-2. So there's an incentive to reward the producers to create more W-2s.
Right. Wow.
So if you don't like W-2, you think it's not fair, don't hate the billionaires. Don't hate the oligarchy. Be the oligarchy.
Right.
Oligarchy.
Okay, oligarchy.
Yeah. They'll be like, don't fight the oligarchy. Don't fight it. Be it. You can't beat them, join them.
Right. Wow.
The whole tax code is set up for you to do that. So you can be a job creator to give other people opportunities.
So that's the first class, is being the producer, being the job creator, the person that's creating the jobs.
The top of the pyramid.
Wow, I didn't know that W-2. That just blew my mind. I did not know that's what that stood for. Okay, so what do you wish more traders understood about business? And as far as I guess we just kind of covered that as far as producers, the business owners, the creators of the jobs are who make they create more opportunity for the world function. Is that
for other people? Yeah, if you don't have a guy on the street doesn't have a job, you start a business and then you hire that guy, right? And then you're a job creator. So the tax code is set up to incentivize job creators. Okay. I've got contractors and people doing all kinds of stuff in business.
Right.
But if I was just doing my own thing, I'm not helping anybody else.
Right.
So guess what? We tax at the highest rate.
Right.
Right? Because with corporate, when you have a corporation, you're not taxed. Like at $100,000, you're taxed at 15%. Mm-hmm. You make $100,000 as an individual, you're going to be taxed at 39%. So it just makes, if there's a reward and incentive, that's why the system works.
Even if you do work a regular 9 to 5, you can change your information as a business owner. You can go to the HR office and change it to a 1099 and operate under a business.
You have to have a business. You have to, not a sole proprietor, maybe an LLC. You have to consult your tax person. You have to create an entity which has the ability to hire other people, right? And that can deduct. The tax code provides. I'm not a tax professional. Make sure you contact your tax professional consultant. But you given as a business owner, you can deduct certain things. You can't deduct as a sole proprietor, right? If you operate as yourself,
under your name,
well, you're never going to do nothing under your name.
Right.
You do underneath the corporation. So being in business, you start trading, incorporate. Work as a trader for your company.
Okay.
Pay yourself the least amount of money that you can, and then write off as much as you can legally. You get while there's plenty of stuff that you can
real estate and education. Right. Like you say, you can go
classes, business development classes, your health plan, your retirement plan, everything you can
seminars.
You can write off, right, in order to lower your tax liability and lower your overall, And then you're definitely going to be hiring other people, and you're creating more wealth in the economy. That's the great thing about the American system. People bash the American system like, you just haven't read the book, right? You got the stereo with all the wires and things, but you had never read the manual. If you read the manual, why people perish for lack of knowledge. You don't have enough knowledge, so then you want to bash everything or burn things down because you don't understand, right? The whole matter is being able to understand. There is a way. If other people are doing it, other people are successful, what can I do to emulate them?
Right.
Don't hate them. Don't hate. Congratulate. Appreciate. Right? And then also you want to have, you want to trade around your lifestyle, not your lifestyle around your trading. And many people make trading their God and their idol. If I only learn to trade, I'll live a great life. It's like, no, you've got to put life first, and then God first, and then life. Because if you don't, your wife will become a Forex widow, a trading widow. Your kids become trading orphans. Hey, honey, just give me some more time. We're going to be millionaires. I don't have time to. You miss their practice. You miss their ballet. You miss their baseball games or football games. You miss the date night. And then you have a bunch of money and you don't have anybody. Your kid's going to hate you. They're going to hate your trading. Your wife's going to hate your trading. Your dog's going to hate your trading. Because you've given yourself to trading.
Right.
So it's very to be balanced, right? Okay. So I don't, 3 hours, 2 hours a day, 3 days a week is about all I'm going to do. I can make all my money in about an hour, but because I the Forex Club and I have students, we stretch it out for 2 hours.
Okay. Yeah, you make it more, for you have to
entertaining, but
and the teaching aspect.
Okay, out, done. Turn off the light, go back to bed. Like, did you blow up your account? Like, no, I just made money. I don't want to stay up anymore. Sometimes it just keeps going. He goes, you want another one? Yeah. And you don't, it's not all the time. It's like
when it
happens, you go with it, but it doesn't happen all the time. Mm-hmm. That's the count. It's wave 3. Wave 3 is the strongest, most powerful wave.
Right.
And you get a 3, but you don't get 3 every day.
Right.
Don't think you get a 3 today and then tomorrow I'm going to do the same thing. That's when you blow up your account. Trying to go back to the well. You'd be like Winnie the Pooh, get your hand stuck in a honey pot,
Exactly. So, we're gonna kind of land the plane here, but as far as the programs that you offer, what are your programs going from, maybe like your lowest entry level program that you may offer up to your premium your program that you offer? What are those? Do they have different? You have different names. They have different groups. How does that work?
We have everything from beginners to advanced. We have a Baby Forex Pips video course bundle, which has 16 videos, very short. Some are 3 minutes long, some of them are like, 5 minutes long, but it's great for people that know anything about the markets, and it's a video set. I think it's not, I don't know the price offhand, but it's like maybe like $27 or something like that.
Okay.
And so that's a great intro. We've also got our Live Forex Trading Club where I trade lives, like $97, 2 hours a day for 3 days a week. So basically you get 2, 4, 6 times 4, 24 hours and pay for $97, working for like $1 an hour.
Right.
$1 an hour.
Hey,
Like
elite, $1 an hour of Elite Traders University, elite trading from Dr. Gregg himself.
And usually like one day you probably make enough money to pay for the entire month, right? So we have that. They have the Forex Scalpers Club.
Okay.
So we have that. And then we have our mentorship, which is our 12 months. We have a 6-month and 12-month plan where you work with me, group coaching, video modules, the Pip Run strategy setup, the ebook, the strategy guide, the indicators, the top secret stuff, which that's the secret sauce that really makes everything work.
Mm-hmm.
Then you get that really good that we have a 3-step process to take people from amateur trader to professional trader. We start with simulator. You have Forex simulating software where you actually practice the system, and usually after 14 days you do 90% on average. Then and our students move to stage 2, which is the demo account.
Okay.
They'll practice with fake money, but the live market using the same system. And then they, usually with the 85% win rate, they can double that account usually within 3 or 4 weeks.
Mm.
Now, that's going to give people a lot of confidence, right? So then we take them to the live account stage 3, where they maybe start with their own money, maybe $100 or $200 or under $500, and they're able to double that. Because now we're dealing with the subconscious, the fear and the greed, the transition. People sometimes are
dealing with real money.
Real money, right? It's like, you're the demo diva, right? You can make $1 million in demo, like, can you do live? Because we have so many ingrown beliefs about money. Things about, like money doesn't grow on trees, or, I'm not Rockefeller, or money's hard to come by. So you got all these subconscious things you got to work through. And you don't want to work through that with a $5,000, $10,000 account, or even a $50,000 prop account. You need to work that out with $100,
right?
Because it's scalable. If you can take 100 to 100, 100 to 200 is a parable of talent. Well done, good, faithful servant. You've been faithful with little, you'll be given much, right?
Mm-hmm.
Yeah, that's
that's the premise.
That's the premise. Taking people who have they say, I want to trade as large as I need. You start with a little, and then because the emotions will come, right? So if they're going to come at 20,000 or 5,000, let them come with 100. Now, if you blow up 100, you're not gonna sleep over, right?
Exactly.
Right.
And at least you tried. At least
you'll be pissed off, you'll be mad, but you can reload it and then be working on something again. So, and then once they do that, when they can double, triple, I got a guy that throws a Social Security check in there, $2,000, $3,000 on Social Security. He says, I just tripled double my Social Security account for the 3rd time. I go, wait a minute, 3rd time? Well, dude, you finished with stage 3. It's like, I did. It's like, yes, you took live money, and I do this all the time now.
So you just keep doubling his
Dirk,
accounts.
Dirk in the chat room, he's like, he just throws it in there, and he just pulls it out. He compounds it outside his account. Double it, pull it all out, start back down, and pull it out. And that's what I've been doing with my challenges. Taking $200 to $4,000 and then pulling it down and then letting it compound. Because sometimes the mentality, your brain, once you get I got 4,000, you blow up, right?
Right.
So it's like whatever your blow up point is, stop, pull it all down and do it again, and then do it again and do it again. And guess what? You got now you got $10,000 in your checking account.
Exactly.
Right. So and then now stage 4 is prop. Because if you were able to make, most of our traders do about 2 to 3% per day, right? So that's 6% a week times 20 tradings. It's pretty good.
A few weeks, in 1 month, 25 hours, like almost a quarter.
Mm-hmm. Right. So now you go to the prop challenge. You do an Apex challenge, or you do top tier trader, whatever, and what 8% you need.
So typically to 8% to 10%.
My guys,
sometimes even lower than that, depending on what kind of challenge you're doing.
So my guys are doing it in a day with 0 losses, no drawdown, just amazing things, right? Because why? Because we went through this process of building this foundation of confidence and consistency through mentorship. They post their trades in the group coaching, 2 hours of group coaching each week, and then we also have the Q&A, and also the group where people are interchanging. You got other people who are doing 90% too, from all over the world. Those trading ideas. It's the incubator. It's just amazing, right? The environment,
community,
right? And the expectation is set so high because typically traders win 30-40%, right? Because they're told well, you only need 30% wins at 2% risk, right? And and then you'll make a good living. It's like, but if you go in there and making 10 out of 10 trades or 9 out of 10, 8 out of 10, and then you did it. It's like you're a different level. You've raised the bar, and so by raising that bar, it's in the real world. You're like, oh my God, it's like walking around with ankle weights, and they take the ankle weights off, and now you can fly.
Exactly. Wow.
Mm-hmm.
So raising the bar. Let's raise the bar. If you want to raise the bar, this is your guy you want to get with. So we talked about basically putting together an offer for the audience. We want to put together something so that if you are serious and you kind of want to you want to learn some of these strategies and you want to learn whether you are a trader or you want to get into trading, you've heard about it, or it's something that you may be interested in, just even based off of this interview, this podcast. We want to offer the audience you said you have the Scalpers Club?
The Forex Scalpers Club.
I think that might be something that people might be interested in. So Forex Scalpers Club. Mm-hmm. We can throw that in there.
Yeah, we give maybe the first week for free.
First week for free. Okay, so you get 1 week free of being in the Forex Scalpers Club. It's $97 a month, $97 a month, and so you'll get 3 days. What is it? Is it
2 hours?
2 hours a
day.
For 3 days off the week.
Mm-hmm.
So 3 days out the week, 2 hours during those days. Mm-hmm. You get the videos of what comes with it. It's a complete bundle package. So we're also going to throw in that compounding.
Yeah,
we're throwing that compounding strategy.
Compounding spreadsheet and ebook.
Okay, we'll throw those in for
10% for 10%, 10 pips to $1 million.
10 pips to $1 million. Anybody want to do it? I'm doing it. I'm gonna do it. I'm about to sign up as soon as we get done. So we'll do that. Anything else we can throw in?
My market heat map.
My market heat map. How long? 1 month?
Yeah, 1 month of my market heat map.
So my market heat map is actually it's a. You can explain it better than I can. But it's actually Dr. Gregg's own
app.
It is his own app. He created an app to where you can just click on there and check out the market and see what direction the market is going in for each different all the different currency pairs, whether the market is going up, it's flat, or if it's going down.
Yeah. So what's popping, what's dropping, what's popping to what's not in the market. Right?
Yeah,
real simple.
So the green, you see the green,
up,
red,
down,
and so the black,
gray,
that's gray.
Stay away.
Gray, stay away.
Let's keep it pretty, I colors and shapes. I keep everything really simple. I taught
that's how we
school.
like it.
I taught some like gang bangers and in South Central. I said, look, you want to stick in my class? I'll teach you how to trade. And I keep things real simple. So
that's how we need it. We don't want to overcomplicate everything. It's already the market. Everything. The world is already complicated. You don't want to overcomplicate something that's already a complex situation.
Yeah.
Dr. Gregg made it simple, and so we'll put this package together. If you're interested, maybe comment or something. We're gonna have a link eventually. We'll put together a link for the people, and you can join and get some real mentorship from a multimillionaire trader himself. And we can, let's let's create this wealth, folks. Let's do it for the fam, man. Let's do it for our people. What do you what do you say? You can't eat black wealth. What do you say?
You can't eat black power.
You can't eat black power. You can't eat black power, people. You know, so we gotta
Green.
We have to develop our skill sets. We have to start buying assets. We have to start to really do these things that they did already. They showed us the ropes. America is a good, as much as, you know, we see, we understand where we came from.
Right.
You know, it was ugly,
Right,
but
right.
yet they showed us like, hey, you can go put a building. We in Vegas right now, so many big old buildings. You can go build a building. It's land available for you to build a building.
Okay.
You know,
There's a housing crisis. Building 4-unit buildings, they're writing checks out for people that can do that.
so you might not have the funds to do it right now or the capital to do it right now, but that's where developing your skills to earn more income, high yielding income. It's all about just like you said, there's nothing wrong with having a 9-to-5 and working a job, but it's about what you're doing with that money and what you're doing with the free time that you have after work and things like that. So yes, we're just gonna continue this conversation, and Dr. Gregg will, his system. I've been through his systems. I've been through a couple of his trainings. Like you said, he breaks it down to a level that we can understand. It's not. We went a little in depth during this interview, but I understand it based off. I can understand some of the things that he's saying just based off listening to him explain some of these things. So I was able to take my ignorance, and I'm starting to learn too. So that's what this podcast is all about. I homeschool myself podcast. My name is LaMar, and we want to thank you, Dr. Gregg, for being here. Appreciate you, man. This is real. This is real.
Thank you, man. Thank you.
Y'all click the like button, subscribe, comment, share it to your people. And if you want to take advantage of this opportunity, there'll be a link that we'll provide for you, and you can take advantage. Y'all stay blessed, stay up, and stay tuned.